Let's do it. Are we all ready?
We're ready.
All
Yeah,
right.
ready.
Well, I've got a different thing today. There's two people instead of just me talking to one, and we're welcoming the wonderful Michael English
Thank you,
uh,
Toby.
and Sir Robert from Dibden, Mr. Bob Dibden.
Hello, good afternoon.
Michael's sort of intermediate expert on Bitcoin and blockchain and stuff like that, and everything he said has made sense to me so far, which is always good. And Bob's more of a sort of likes to keep things simple, which I think is often a very good option when you're doing investments and for the long term. So you're a macro Bitcoin bull, aren't you, Bob?
Yeah, I'm not a detail man. If I get the basics and it resonates, I'm in.
Yes. And what would you classify yourself as, Michael?
Well, I'm really what they call a hodler in Bitcoin. I've sort of been scaling into it. Really, I first came across it in 2015, actually, where a friend of mine was a computer programmer in IT, and he mentioned to me about Bitcoin, and it sort of just went over my head in a way. And then I scaled into it a little bit in 2017 when we had the huge bull run back then, going up to 20,000, went right up to 20 and then dropped back down again to about three or four. And then it really piqued my interest again in 2020 when we had another huge bull run going up right up to 69,000. So I would class myself as more of a long-term holder in this space.
Cool. So is it just Bitcoin? You do all sorts, don't you, as well?
Well, I predominantly like Bitcoin. Obviously, it was the first cryptocurrency that came out in 2008 after the financial meltdown. Coincidentally, I mean, it was, and it sort of formed it there. So in 2009, then you could sort of purchase it. It was literally zero. And now it's trading around about $40,000. So, from an asset, a hard asset that was actually zero, now we're trading at those sort of levels. And look, it's a volatile asset. And you just got to be comfortable, I feel, in the space if you are going to be holding an asset like Bitcoin. And, there's others I hold as well. So I've got like a portfolio of different cryptocurrencies. But I think, when you invest in anything like this, you just got to do your due diligence and be comfortable with the volatility as well.
And what about you, Bob? Have you got lots of different cryptos and stuff, or is it just a few?
Well, I've been similar to Michael. I came across it in 2017, and first of all, I like the idea of Bitcoin. It's decentralized, from all these large centralized corporations that are failing us. The idea of something being decentralized sounds really good, and obviously in the last 15 years, it's been growing and building, and it's been slammed by a lot of people as being like a Ponzi scheme. And I'd say the US dollar or the pound could be argued as Ponzi schemes. They're losing all their value. And they tend to say if you're putting money into Bitcoin and other cryptocurrencies, let's just stick with Bitcoin for now. You're going to throw your money away. Well, I mean, how much is the dollar and the pound losing this year? Probably at least 10%, I'd imagine. So you're losing money by keeping it in your local currency. So for me, Bitcoin is what email is to electronic messaging. Bitcoin is like money over the internet. And I think whether something like Bitcoin does replace the fiat system, I think we all agree the current financial system is on its way out. Financial systems do change over time. I mean, the Roman denarius was debased by replacing some of the silver content with other cheaper metals. And so I think we'd all agree that the current currency system will go. It's just a question of when. And, with all that's been going on the last few years, particularly with the money printing, I think it's going to end at some point before too long. Is it going to be 1 year, 2 years, 5, 10, 20, 30? Who knows? Is gold going to maybe replace fiat currencies? Possibly. Is it Bitcoin? Who knows? But for me, I found it very interesting, intriguing. it's a big new asset class that's gaining adoption. And I thought, you know what, I'm prepared to risk some money into it. And yeah, for me, it's yeah, I see a big future in it. But no doubt we'll discuss other alternatives. In terms, I do have a lot. I'll show you my t-shirt. Actually, I'm quite into Ethereum as well. I'll show you my t-shirt. If you can see it.
Wow.
Wow, great.
You're not a flat earther then?
So for me, yes, it's a bit of a fan. So for me, Ethereum, the #2 cryptocurrency, is like the decentralized internet. So Bitcoin decentralized money, Ethereum the decentralized internet. So imagine rather than a corporation centralized like Microsoft with their Windows, for me, Ethereum is the decentralized version of that. And you have lots of different applications, like you have different software on Windows been built on Ethereum. So again, to own part of the new decentralized internet from a very simple level sounds quite exciting to me. So so I'm into those two. I've got some Solana, but all the other ones, I've got small amounts in. Quite a few of them I got into lost like more than 90% of their value. But for me, looking at the key ones is quite useful, and the other ones a bit more of a punt, because I think it is a bit of a wild west out there. A lot of them will probably go to nothing, but you know, a number of them will have good use cases, like different software programs have uses now. So yeah, that's my story a little bit.
It's a little bit like what you're saying. It's a little bit like the betting on all the search engines that are out, like Netscape, Navigator, Yahoo, and just sticking a
Yeah,
little
I
bit
do
in
see
everything,
it as,
and then getting basically everything's, a lot of them gone to naught, and then just winning big with Google. That's a good analogy,
yeah,
isn't it? Really?
yeah, that's great, Toby. I see it as a very similar thing to the growing of the internet in the 90s and early noughties. You hear it with Bitcoin, like, oh, it's dropped down 40%, 60%. But Amazon, you know, what a huge company Amazon is, and it's lost 50% of its value, I think, 8 times, and 85% of its value once. But you know, it has a huge amount of it's used a huge amount, and there's a lot of value in it. So I think you just got to do a bit of research, know what you're prepared to risk. Certainly, if you're looking to get into any of it, if it gives you fear and you're concerned, don't do it. Don't do anything out of fear. But for me, it was just, I was just intrigued and fascinated by it.
So yeah, that actually got quickly on fear. That's the biggest killer for your wallet. Fear of missing out, fear of missing out,
fear
and
in
going,
life,
being
health,
emotional.
money,
Yeah,
everything. Yeah.
any financial purchase should be done very unemotionally and on logic and stuff. So I'll go into that in a minute, actually. Michael, what's your outlook on what Bob said with regards to what you're doing? Because you made 1,000% on Solana, didn't you? Which is a lot of money.
I mean, with Bitcoin, for example, and then you've got your other basket of cryptocurrencies. The Bitcoin is going to be really, that I feel, the safest one. It's probably done a lot of its gains in its earlier years, but you know, as time goes on, I think it will become like a store of value. Some people are classing it as a digital gold. I look at it as a technology. Again, I have you know, when we have this, what we call a bull and this bear market, which we could go into in a bit more detail, is that all sort of everything sort of rises in the bull market, and a lot of the altcoins, what I call, will outperform Bitcoin percentage wise. But what you've got to do, and my strategy has been over the bear market where everything's been going down, is you just want to begin just scaling into projects that you sort of maybe believe in a bit more longer term. I mean, the situation that we've got, I feel at the moment, is that when we had this massive bull run in 2020, you had a lot of the money printers on, and you had £2 trillion just printed out of thin air that, you know, put the markets on steroids. And that filtered through into Bitcoin, and we had just this huge run up. And then all of a sudden, you know, we had this tightening cycle where all the interest rates, you know, when you were really low, and now they're at sort of what 5.25 now, the Bank of England base rate is. So we're in a tightening cycle. So the interesting thing I feel will be, you know, as we come now into this sort of next bull cycle, which, you know, again, we can get onto the halving, which comes out in April. You know, will it be the same as the last run up? Because we just don't have that liquidity in the system at the moment.
Do you follow Lynn Alden?
I follow Lynn Alden,
Yeah.
and I also follow Gareth Soloway. I know you're a fan of Gareth.
Yeah.
I think Gareth got a lot of followers because he pretty much called the top on Bitcoin. And a lot of people were still listening to Gareth, and I know he was calling a $6,000 to $8,000 Bitcoin, and it never really got there. It got to about 15.5, 16, depending on what exchange you were on. So I feel possibly now the bottom's in if all things are equal and we carry on with no black swan event.
Okay. If we discuss, well, I'll tell you how I got into, I'm not even in Bitcoin, but how I got knowledgeable about it. And often it's easy to look at someone like yourself who knows a lot, and someone else that's watching me that knows nothing maybe, and think, oh, I'm too late, or I don't know what I'm doing or stuff. But it's easy to actually get your head around when you look into it. But it just takes time with anything. And I saw it in 2020, and I was looking at Ethereum. It was about 175 quid, and to me it was too risky because I had to, you know, I didn't know what was going to happen with the world. Everyone else was running around crapping themselves about disease. I was actually more worried about the people and the social unrest and the government's control, ever increasing control. So I went to gold and silver, and that was the right thing to do for me. As I said the other day, if I had like 200 grand kicking around, I would have definitely allocated a bit into crypto, especially Bitcoin, but I didn't. So, but I don't know. It's always had this energy to me, which I just don't feel comfortable with. Well, I haven't felt comfortable with. Now I slightly am. And I ended up actually FOMOing in on what was it, Litecoin, Cardano, which actually did pretty well, to be fair, and something else. And I just did not like it because it's always open. The market, I was used to normal stock markets, and I don't know, I just didn't feel comfortable really. But I think now,
Yeah, I mean,
now is the time, isn't it, to really sort of get you to grips with it.
I think also for me, a bit like Michael, I'm a hodler. I mean, you know, I'm holding stuff really because the trading game is quite tricky. I mean, in the early days, I would sort of buy Ethereum or Bitcoin and then sell it and move between the two, and I'd always time it wrong. So I then sort of left it. It reminds me of what Charlie Munger from Berkshire Hathaway, one of the largest funds in the world, once said. He said the ones that made the most money were the ones that were either dead or didn't know they had an account with them, because they're not moving it around. They're not doing things out of fear or greed. They just, you know, thought these are good companies that they want to invest in and left it there. So for me, I think it'd be quite nice to just, you know, not have any media for like, I don't know, 5 years, switch it back on and see where we're at. But yeah, the trading game is quite tricky. You've got to, it can consume you a huge amount. So I don't like to trade anymore.
Okay. Yeah, I agree with that. So for the purpose of people watching this that haven't got a clue what we're talking about, what is crypto? What is Bitcoin? What's the point in it? Because it's a in my opinion, it's a non-tangible asset that has
So what
value.
I would say, what I would say to that is the cryptocurrency really is a typically a decentralized digital money designed to be used over the internet in the simplest terms, and you know it makes it possible to transfer the value online without a middleman. So you've got no bank or third party really involved, and you know cryptocurrencies are usually in the main not issued or controlled by government. So that is what I would just sort of describe it a little bit in a nutshell. Bitcoin is sort of it's an open source, so it's peer-to-peer transaction. And we'll get in maybe into the nitty-gritty of stuff, maybe in another a video or whatnot, or a workshop. But Bitcoin is what they call a layer one. And a layer one is something like Bitcoin, Ethereum, Solana, where the foundation of that is a decentralized network. But the problem is with it, with a payment system, it's a little bit clunky, it's a little bit slow. So then you'll get like the Bitcoin Lightning Network, which is a layer two, which makes the transaction speeds a lot quicker. But I won't go into too much detail with that with the audience today.
What I've noticed, a lot of people who look at Bitcoin relate it to technology now. And I do think it's designed for technology. It's going to be way different to what we're looking at the moment. I think it's called Internet 3.0 or something like that. The metaverse and all that, where I don't think we're even going to be looking at screens. It's going to be kind of so different because we're in a huge revolution with robotics. Artificial intelligence has just suddenly arrived miraculously. I don't know who has been holding that back, but or the Lemurians have given it to us or something. We won't go there in this video either. It just seems a bit too good to be true, because I know you guys probably get the Sakamoto, whatever his name is. What's his name?
Satoshi Nakamoto.
Satoshi Nakamoto. And it just seems a bit too good to be true, considering the bank's just gone through a banking like shite storm. I could just see JP Morgan sitting around a table with the Rockefeller family saying, right, how do we get ourselves out of this? And I don't know. It's a good story.
Yeah, I mean, you could have a whole session just on that situation.
Yeah.
And
so who is
the outcome? But
who is Satoshi Nakamoto, whatever his name is?
Well, he's an unknown person. No one knows his identity. He's one of the largest holders of the coins, and I don't think that wallet has ever moved any of the coins. But getting back to Bitcoin, there's 21 million coins. That is the ceiling. So it's got a finite supply. We've mined now just over 19 million of those coins. So there's only 2 million coins left to mine. And when we talk about mining, a mining process is when we've got a computer program and solving these complex puzzles to form a coin. And this is what we call mining. And the mining is, then what happens is with these mining pools now, you've got a group of miners that they will get rewarded for every block that they mine. And I believe at the moment it's 6.25 Bitcoin they receive for every coin that they mine. And the halving then comes out in April, so that will be cut in half. And this is then where you get this sort of supply shock, and it's built into the code of Bitcoin.
So when you say mining, it is actually a ton of computers, isn't it? High quality computers. I know someone's got, well, he set up a mining thing in his garage and it heats his whole house. it's that hardcore. But it's not making money anymore. You really do need, because I'm a big fan of certain companies like Marathon Digital and stuff like that, and that's kind of how I play Bitcoin every now and then. I do like it because it's so much more volatile than other stocks generally, apart from natural gas at the moment. So in terms of like Bitcoin, let's say I want to go and buy a Bitcoin, or I want to buy Solana or whatever. Where'd you go? What do you do? Do you go down the shop and buy it in a post office or something?
What you need is an off and on ramp. So you'll be got your fiat currency, and you normally do it through a centralized.
What's fiat currency?
Fiat currency is our paper currency, our pounds, our euros, our dollars, whatever you're trading in. You can then set up an account with normally a centralized exchange. I would go with someone that's quite trustworthy, like Coinbase or Kraken. That's got a sort of reputation. You've got to do your KYC, which is know your customer. So you fill out all your details. I've got nothing to hide. I pay my taxes. So you'd have this on ramp to buy your cryptocurrency, and then you'll have your off ramp to either extract it back into the bank again, or you then put it into cold storage. That probably maybe bobble. I certainly take a lot of mine off the centralized exchanges and put them what they call into cold storage, which is a wallet like a Ledger or a Trezor, where you haven't got any counterparty risk. So when I say counterparty risk, is that you haven't got a third party looking after your money. And it's a bit like, when we put money in our bank account, we don't actually have that access to that money. We don't own it. The banks really have custody over that money. So again, Bitcoin is a little bit about taking that self-custody back into your own hands again.
Cool, that's good. And what do you keep yours on stick things like Bob?
Yeah, so I mean, first of all, I'm on a number of exchanges. In general, I use Coinbase. Some of the tokens where they've not been on Coinbase, I deal with Huobi, but there's other exchanges. But in a lot of cases, more and more tokens or coins come onto Coinbase. I find it very easy to use. But I do most of it. I do keep on a this what Michael's calling cold storage. Essentially, it's like a USB memory stick, but it's encrypted. So essentially, the benefit of that is that, let's say, for example, Coinbase, which is a company, if the company had some issues or their server was down, you won't be able to access the value of your tokens. Whereas if you remove them and put them into this encrypted memory device, memory stick, essentially then you're protected from, you kind of hold them as such. And again, we could talk about what does holding them actually mean. We can start to get technical, but again, it's keeping it simple. If you've got them not on an exchange like Coinbase, then they're more secure.
What happens if it gets corrupted or you get water damage or electromagnetic pulse or something like that? You're a bit screwed then. Or forget
it's a good question. So or you could, for example, lose this memory stick. I use a Ledger. I think they're very easy to use. But you could lose it, or it could, you could drop it on the floor and stamp on it or something. You can you get a 24 words. That if you were to buy a new one of these devices, you type in the 24 words, and essentially it restores your links to your tokens through the blockchain.
Can you have you have the same one on two different sticks? So you could have one in a safe and one somewhere else. Is that possible?
Well, that kind of, I suppose yeah, you could well do, as long as you know the PIN number to open up your memory stick.
That makes sense.
Or indeed keep your 24-word list somewhere safe.
There's a lot of people that had Bitcoin from the early days that have forgotten their passwords, isn't there? They've got like millions of pounds worth of.
That's it. Although Michael was correct in saying there's like only 21 million coins that have been produced. Quite a few of those are from people that have forgotten their passcodes or password phrases to be able to access their tokens.
Or died.
Or died.
The average person might just think it's just memory stick, so then chucked it out. So,
but for me, it's like it sounds a little bit scary, but when we access our bank account, it's digital. It's no different in a way. And also trying to access your money from a bank, particularly online with all the passwords, is quite difficult. So it has got a lot easier now with companies like Ledger and Coinbase and others to be able to do it from a technical level. It was more geeky, a bit like the old internet when you had MS-DOS before Windows came along. A lot of this stuff is now more friendly, whereas when I got started and at Michael, a lot of it was quite geeky and nerdy, and you go onto these kind of techie exchanges, it was quite tricky. But it is easier now, and I think when you start doing it, you just send very small amounts to the exchange just to get comfortable with it, because it's a bit like when you're sending these value in tokens, whether it's from Coinbase to hardware wallet, or you can send it to someone else. You have to put in a long code, a long string of letters and numbers. It's like an email address to make sure that which account it goes to. So like if I was to send you an email, Toby, if I put your email address in correctly, you're not going to get it. It'll get lost. It could get lost out there. It's the same with cryptocurrencies. If you put the wrong wallet address in it, it could go to someone else or just get lost.
So with in terms of exchanges, I mean, I used Coinbase Pro. I can't remember why, it's cheaper or something. So I put my money in Coinbase, sent it to Coinbase Pro, which back in the day, I don't think you could actually do it any other way. Then I went to Binance. I had a Binance account as well, which I don't think it's a bit dodgy, isn't it now? Binance.
Well, I wouldn't say it's dodgy, so to speak, but you've had the guy, I'm just trying to think of his name, CZ, who has stepped down now as the director, and he's been caught up with fraud charges, I think in the US mainly. But it's a risk, I think, keeping your money on any of these centralized exchanges. And it's a lot of people, I think, got burnt with the FTX collapse, which is, I think a lot of people have got, I think their confidence is probably been knocked a little bit from that saga with Sam Bankman-Fried, or fraud, like as I like to call him. He ran off with a lot of customer funds, and again, it was probably because it wasn't audited. A lot of these centralized exchanges aren't really properly audited. I mean, I think Kraken has a certain amount of auditing that goes on within their organization, but yeah, it's definitely a risk. I think the best way I would describe it, and a guy that I follow on the Benjamin Cowan, a cryptocurrency, a YouTuber, he said a centralized exchange is very much like a public toilet. You need to be in and out quite quickly.
Depends where the toilet is.
Yes.
I can't. What was I going to say now? Yeah. In terms of the exchanges and stuff, they're quite straightforward, aren't they? It's no different. It's probably easier than using PayPal from what I've experienced. And actually, you can buy crypto on Bitcoin on PayPal, can't you? Funny enough. And you've mentioned decentralized quite a lot, but if these great big, potentially dodgy institutions are buying up all this Bitcoin, for example, BlackRock and a few others, will that not change the dynamics? At the moment, it is reasonably, well, it has been anyway, Bitcoin has been reasonably decentralized, which means it's not regulated, it's not controlled by banking systems. And funnily enough, the Federal Reserve has never had an audit, has it either? So there you go.
I mean, I would say, like, now we've got the ETF, the spot ETF now approved in the US. It's going to give people in TradFi, traditional finance, an opportunity to maybe put part of these, Bitcoin into their portfolio with these, management companies. I don't know if BlackRock coming into the space is a great idea, but I guess a lot of the institutional, the way that the price has gone up really this year, I think it's really been institutional driven. I personally don't think it's been driven too much by retail, because I still think retail are still on the sidelines a little bit, especially after a few people I feel that have got burnt in the space. And it's going to be getting those people back with the confidence. I know people, friends of mine, that invested in like Hyperfund, Hyperverse. There was a lot of stuff that was going around on the last cycle, and then these people were just either illy advised or just didn't do any due diligence of what they were actually investing in.
That's the key, isn't it? And we started off with saying, don't put your money into something you don't understand, and secondly, look at your motivations for doing that. And I was going to touch on that actually. There's quite loads of people I know that I put $5,000 into this Bitcoin thing. I'm like, well, what is it? I don't know. I'm hoping I might make some money. I'm like, well, where's it at? Oh, there's none left. And tons of people. I mean, the the director of a hotel chain that I know quite well. He's quite reasonably well off and everything. He said the other day, "Oh, so it's just a bloody scam, Bitcoin," because he saw my stuff on gold and silver, and we had a staff party. It's all a bloody scam. I put a few grand into this thing. It's all a scam. Never again. And this guy is like quite an intelligent person, but he still threw a load of money into this, not really knowing what he was doing. So what would your advice be for people that get approached or find these schemes that promise them a certain return? And there's so many people I know that have no idea about what they're doing that have done this. They're not going to come back in a hurry, are they?
I mean, first of all, I would say, is ask people that you know, if anyone that you know has been, like myself and Michael in it for a while, to try and get someone else's view, to get some kind of context or rationality on it. And if you are to take a plunge with something, I mean, if it's a newish token or it's quite high risk, just put a small amount in that you're prepared to lose every penny of, because you may well do. Yeah.
I mean, I've been quite adverse to all of this because as I've said, there's something about it. I don't like the energy of it. I've missed out on tons of returns, really. I mean, I'm fanny arsing around with normal stocks, and getting like 10%, whereas I could have been getting 1,000. Do you know what I mean?
But when you think about it, you've got the halving coming up. So basically,
what's that then?
Michael was saying, so essentially the reward that Bitcoin miners get for solving the algorithms, which means there's less supply going to the market. So less supply, plus you've got more demand. With this exchange traded fund that Michael was saying that's just been authorized in America. There's, I think, 11 of them that's been launched. And if you consider it, all these different firms will start to tell their advisors in America to start discussing it with their clients, particularly if their clients have got a good attitude, happy to take a risk. You start to see all that money start to come in, less supply, more countries countries are starting to think about adopting Bitcoin as legal tender. I just think you're going to get this big supply squeeze, and with companies like BlackRock getting into it, I think for me it's a little bit like, if you can't beat them, join them, and it provides legitimacy. So I think if you're starting to see the Securities and Exchange Commission authorize it, it legitimizes it. Therefore, it gives it some, even more credibility. And I think once you see all that money start to come in, more people will want to get involved. So I think it's a good time to get into the market. And yeah, I wouldn't be surprised if we see some quite big gains from where it is now over the next 12 to 18 months. And
we've actually got a bet, haven't we, Bob?
Yeah, we had a little cheeky bet for a penny, I think.
That wasn't. It's for a meal. I betted by the end of March it will be down to 22, wasn't it? I can't remember. No, 30. I can't remember now.
I think you keep pushing the figure lower. I think
32. I think
I said above 125,000.
Okay.
For the year, and
what's that at the moment?
And you said below 30,000.
Around 30,000, 32.
Yeah, I don't think it'll go that low.
By the end of the year, it'll get to 22. But that doesn't mean it will go up to 125 and back down again. So we'll both just split it in the middle.
I think this ETF, I was just going to say, just touching on this ETF, I think this ETF will give the chance of the baby boomers a chance to get a little bit of their portfolio into Bitcoin, where someone like my dad, he's been in markets for years. He and that's probably where I've got my passion or my interest in markets and stuff from him. But he's not confident with it. He doesn't really understand it. And he's not really, confident on a computer probably to do self-custody. But this is where it gives an opportunity for another generation, I feel, to have a little bit of exposure without, the risk of doing something wrong with the self-custody side.
Well, I suppose it's in the SEC decision in America. That's just for American exchange traded funds. So the FCA, Financial Conduct Authority in this country, you can't get them here yet. So whether we might start getting them here, we'll just have to see how the FCA views it over the coming 12 months, really. But there are other ways of getting, exposure to it in a way. Like I think you mentioned, Toby, you can buy the mining stocks, or other companies that are invested in the technology. So you can buy companies behind it rather than the actual tokens.
There are actually ETFs. I mean, VanEck has come up with one, and it's VanEck's quite a big. They do the GDXJ, which is the gold mining miners ETF. An ETF's exchange traded fund, so it basically holds a load of different companies, limiting risk, but you get bigger fees for that. But yeah, they've got one. It's the Bitcoin businesses. It's basically, I haven't actually looked into it yet, but they combine a load of different businesses like Marathon Digital, probably Coinbase in there. So that's actually that's what I like about Coinbase. Actually, it's been IPO'd, which is it's on the New York Stock Exchange. So it has a lot more paperwork to fill out and stricter rules, which is probably the good thing about Coinbase.
Look at MicroStrategy, and also you've got to watch the share price can fluctuate quite a lot, and may reflect more or less the the value of the Bitcoin in the company. But it's a way of getting some exposure to it.
I'm a big fan of recommending well, not trying to hedge your risk basically, but so I would always recommend an ETF if you're going to get into Bitcoin stocks. And stocks are dead easy to get into. If you wanted to go that route, give me a shout, I can help. So yeah, with my issue with all these great big institutions, especially all the as you say, if a load of pension funds start buying up Bitcoin and stuff, these great big institutions, let's face it, BlackRock owns the world's media. They control the world's media, and I do think they're nefarious. They are so connected to deep state. I mean, there's enough proof of that. Is that not worrying that they could be banned? It could have a change of use, so it won't be decentralized to start with, let alone, and then maybe this is what's been planned all along. So then the US dollar, that who US know they're screwed, will just basically wipe off all debt, which could be some version of Nasara Jasara, and just translate it straight to this digital asset of some sort. Maybe alongside physical gold. I don't think they'd want to be restricted with gold or any physical asset, and they'll get away from the petrodollar basically. So what do you think of that?
Michael, do you want to go first?
Yeah, I feel that it's. I mean, for me personally, it's a hedge. So it's just taking that risk of, if things do collapse, where the whole system could come down like a pack of cards. We really don't know what's going to happen over the next 12 to say 24, 36 months. So for my calculation, it's just hedging against that. So if we do get a banking collapse, we get a financial collapse, obviously Bitcoin will come down with that, because obviously it's correlated to some degree to the S&P 500, which are the top 500 trading companies in the US. Now, for me, it's going to be what recovers the quickest. And if it all does come down the way it could come down, I personally believe Bitcoin will recover the quickest from that. So it's almost bringing everything down into the ashes for things then to grow again. But with the BlackRock side of it, been linked to a deep state again. Look, that's another conversation probably for another time, and quite possibly, there could be links between the two.
What do you think, Bob?
It's difficult to know, isn't it? Really, I think you've just got to only risk what you're prepared to lose. But again, as I said, if the money system blows up and your pounds aren't worth much anyway, then how different is the risk? And the Bitcoin is a global thing. We know a lot of company or countries in particularly in Asia are getting rid of their dollars and starting to acquire Bitcoin or mine Bitcoin. So I think you can see the trend here, and I think if you've got some exposure into it, as Michael said, it's a bit of a hedge. And you know, who knows? It could be the currency of the future, or it could maybe be the underlying asset of a basket of currencies. Who knows?
Well, I mean, I'm a contrarian, and I like physical assets, as you know. Yeah, they're not sexy, they don't make massive returns, but I mean, I've got some here somewhere. I don't own a lot of physical gold actually, but I've got enough. Like an ounce of gold, you know, is nice to have. But as you've said, it's nice to hedge, which is not like a garden centre coupon or anything. It's having lots of different types of things that will work over time. Like gold, for
Yeah,
example,
I mean,
10%
I see.
allocation to gold. It'll only in your lifetime, it might only actually perform well once, but that will be when all the rest of your stock portfolio, your bonds, Bitcoin potentially, and all your assets like your property, maybe that might all go to really go to that, lower its value.
Yeah, I think for me, it's too much of a risk not to have it.
Yeah.
So if we got like Kathy Wood who at ARK Invest, her bull case is over $1 million a coin to her bear case of 250. I'm not saying that's going to be in this cycle, but certainly if we look at a 10-year, 15-year, 20-year outlook, if that happens, then the 40,000 it is trading at now doesn't seem too bad of a bet, does it?
Yeah, exactly. And
And I also think those that are, worried about the risk. I mean, let's say they put what they're prepared to lose into it, or a certain amount. If, let's say, it then doubles, you could then maybe say, look, we'll sell half of it, so you've got your money back, and then essentially you've got what you've got left over for free. You've just taken away that risk, that stress, if it's a concern. So I think it's good sometimes not to get too greedy.